Good afternoon, girls. Yesterday in yesterday's class, I have discussed with you what is meant by what is the theory of internal reconstruction. Let us see how the problems will be. Before going to problem, let me have the recap of what is meant by internal reconstruction. Yesterday, I told you girls, when the company is not in a position to sell off its business to somebody else, it will restructure internally its financial position. Means maybe asking the creditors to give for concession and clearing the debts with a lesser amounts by requesting the debtors like that. So let us see how the problems will be appearing in the books of the company's accounts. See the problem number 2. Here you were given 10,000 equity shares of rupees 10 each fully paid up, 10,000 7% preference shares of 10 fully paid up, goodwill, fixed assets, stock, debtors and profit and loss account. Now coming to the problem, girls, it was resolved that equity shares of rupees 10 each be reduced to fully paid shares of 6 each. Means already the equity shares are of value rupees 10. It was decided that the company has decided to reduce the face value to rupees 6 and forego rupees 4 on each equity share. So this is the summary of the first line. Coming to the second line, 7% preference shares of rupees 10 each be reduced to 7.5% fully paid preference shares of rupees 7 each. Means on 10 rupees each preference share they have reduced to rupees 7. Means they decided to forego on preference shares rupees 3 each for 10,000 shares. So let us see the first journal entry, how it will be appearing in the books of accounts. So the first journal entry will be equity share capital account debtor rupees 10 to equity share capital rupees 6 to reconstruction account. Means here to share equity share capital account, total amount of the face value of the share rupees 10 rupees into 10,000 shares, that comes to equity share capital account debtor 1 lakh. Next comes to equity share capital revised value of rupees 6. So rupees 6 into 10,000, that comes to rupees 60,000. And the next one to reconstruction. After reconstruction, they decided to forego rupees 4 on 10,000 shares of equity shares. So that comes to rupees 40,000. So the entry will be equity share capital account debtor rupees 10 to equity share capital account of rupees 6 to reconstruction account. So this means I'll tell you the meaning of this journal entry. 10 rupees face value shares were split into rupees 6 and after reconstruction the company decided to forego rupees 4. This is the summary of the journal entry. Next, same will be the case with the preference shares. So coming to 7% preference shares, 10,000 shares are there. So how much the company decided to? They decided to accept rupees 7 and forego rupees 3. So the next entry will be 7% preference share capital as is the equity share capital rupees 10 into 10,000 shares, that comes to rupees 1 lakh. And next one to 7.5% preference share capital accepted rupees 7. So rupees 7 into 10,000 shares. So that comes to 70,000. And the next one to reconstruction, they decided to forego rupees 3. So rupees 3 into 10,000, that comes to rupees 30,000. So the first one is for equity share capital and second one is for preference share capital. And the last journal entry will be, after seeing these two, you just come to a particular conclusion that the reconstruction account shows a credit of rupees 40,000 in the first entry, rupees 30,000 in the second entry. What to do with this reconstruction amount? He has given here. It was further resolved amount so available be used for writing off the debit balance of profit and loss account, goodwill account and other fixed assets as much as possible. So out of this 70,000 which is available with in the form of from equity shareholders and preference shareholders after reconstruction, this 70,000, how to use this 70,000 funds, because the company is already in sinking position. So here you observe girls, this 70,000 must be used for profit and loss account balance waiving off, goodwill waiving off, and if any amount is left over in the reconstruction amount, that must be adjusted with fixed assets also. So the next entry must be here. In both these entries, the reconstruction account is showing a credit. So how to use this particular, disburse the amounts which are in already reconstruction account. So this time you debit the reconstruction account because the credit balances we are using now in this reconstruction account. So how to use means reconstruction account debtor. What is the amount of goodwill over here? 10,000. So reconstruction account debtor 70,000, to goodwill 10,000, to profit and loss account 45,000. So to goodwill account 10,000, to profit and loss account 45,000. Now here you just see, girls, other fixed assets as much as possible. Means what is the amount which is left over must be used for waiving off other fixed assets. So what is the amount left over? Your reconstruction account already showing a balance of rupees 70,000. Out of 70,000, goodwill 10,000 and profit and loss account 45,000. So 55,000 already you allocated, you have used it. So how much is possible out of this reconstruction means 15,000. So here the entry goes like reconstruction account debtor 70,000, to goodwill account 10,000, to profit and loss account 45,000, and to fixed assets balancing figure. Means this is he has given as much as possible. Now that's the reason. To fixed assets balancing figure, that is 15,000. So these were the entries you are supposed to open, and how the revised balance sheet will be shown. So what is there we have done over here means how the revised balance sheet will be shown means I'll just show you by drawing over here. So he has asked you to open revised balance sheet. So by opening the balance sheet like this, what is there in the liabilities? So obviously this is liability side and this is asset side. Coming to the liability side, he has given you a share capital of rupees. So how much share capital you need to write, girls? Means by equity share capitals. Equity share capital 60,000, and next one 7.5% preference share capital. Out of the journal entries you need to post, that is 70,000. So you are given with two capitals. No other current liabilities are there, because in the given problem you can see only two equity share capitals was given, and that too we have revised the share capitals. Next, coming to asset side, next fixed assets. How much fixed assets are there in the given problem, girls? You can see fixed assets are rupees 90,000. But out of 90,000 we have revised 15,000 adjusted with the amount of reconstruction. So you are left with 75,000. Next, coming to inventories, and next what is the asset which is there here means inventories. Where this inventories is available, inventories are nothing but stock. Here you are given with the stock of rupees 30,000 in the problem. So that stock is as it is. Next one is debtors available in the problem, that is 25,000. So that's it. Your revised balance sheet total is 1,30,000 and 1,30,000. So this is how you are supposed to go for reconstruction problem, girls. This is problem number 2.